So, guys, it's time for another episode, and this one is kind of special because it's about new rules, and um, and yeah, I have changed a few things since last strategy video, but um, but yeah, I will explain them to you, those rules. So most of the rules. Pretty much the same, just a few other things to look out. So first rule is the same: candle close to extreme, and entry after coming back from extreme. But this time I changed the fast entry model to premium entry model. So yeah, I will give you live examples here. So fast entry models was like just this small break like this and this and this here. And with premium entry model, it's more like right here, and not this first. Let me show you. Let me make it smaller. So this is like off session, but I will just give you an example here. So with fast entry model, entry was here because this was the break. With premium entry model, entry will be here actually, because it needs to break some structure, like right here. When you're looking for sell setups, then this line needs to go up, or like be even at least, like up like this, and then break it. So this will be there is no extreme tap, but basically this will be entry, not this anymore. So what it will do, as you can see here, so down here was better entry. It's just like a random example, but it already shows that it's working. So this one would be entry with fast model, and with premium model will be this break here. So no, not a lot of difference here, but there is few, like a few, really like actually a lot of examples where this works a lot better. So let's say right here, if there will be some kind of break, that will be fast, but premium will be here. So you will avoid those like drawdown movements because of that. You will enter when the trend is already happening. Your move is already happening. You will enter then. So that's why I bring this rule, and yeah, it looks like it's working really well. So so yeah, that was the first change. And so market, second rule, market on the left side, or POI, that is the same. Maybe one thing what I changed a bit is that that the POI level should be less than 3 hours ago formed. So it can't be like really old POI level. It should be like a recent level, and it shows that it works actually better. And I have actually like real example in here. So this one was entry because POI right here. So it's around 3 hours ago, everything fine. So, but with this one, so here was trade, I believe. Here was, yes, entry. So broke this level, entry. And you can see there was a lot of drawdown, and market still kind of wants to go down. But this POI was too far. So no entry right here. Actually, okay, this this trade is going into our direction, but still it will avoid a lot of losses. This yes. So let me remove this because I will take this, and let's see another rules. So next rule is actually needs a bit more of explaining. So it's a Fibonacci rule, and and why I made this rule, because I've seen last few weeks that we get the same kind of losses all the time. So if the markets goes up or down like really fast and broke everything, then let me give you again examples. So I think yeah, that was London, but yesterday was few good examples. So let's say right here. So this was move up, and we get like usually first buy signal. So there is POI, everything is correct, and move should be right here, I guess. So even though it was a win, still like you shouldn't, you just drag your Fibonacci from bottom of the start of the move till the end of the move at this time. And if the Fibonacci is not touching this area, then you shouldn't go in. And this area is around 50%. I use 45 to 55, so it's not like that that correct. But let me show you a few more maybe examples. There was a lot of examples actually this week, so we prevent a lot of false moves. Yeah, this is good example. So um, here was move down, so from top to bottom Fibonacci, and here was the signal. So you can see that it was a loss, and it's usually because market wants to go up even more. So here it touches this 50 to 45 kind of area, and now those were all like two winning setups. So we avoided this one loss because of this Fibonacci rule. So Fibonacci rule, just if there is like big movement like this from top to bottom, or if there's up movement from bottom to top, and it should be around 45 to 55, or even above, just not below in that case. In shorting case, not below. And yeah, then you are good to go. Here was a few examples again. So this was like up move. This first trade was invalid actually, and it wasn't profitable because it doesn't touch this line. And here you can see why I made this rule, because this happened a lot, like this, just like it's like silly loss. I think it's loss that can be avoided with this rule, and yeah, it works. So from bottom to top, Fibonacci, looking for these areas or below, like here. There was a second signal was below this, and it was take profit. So yeah, that's. Let me see if we get any more. Actually, yes. Like recently it happens a lot. So um, move down. Here was first trade. It was invalid because it touched everything was correct, but just under this Fibonacci, and it was a loss. Next trade, after Fibonacci touch, it was win. So it happens a lot lately. I don't know, like I would say in the last 4 weeks, maybe 20, around 20%, 10 to 20% of profit would be made because of this rule. Not be made, but maybe 10 to 20% of loss could be avoided with this rule. So so yeah, use this Fibonacci rule with like here you don't need this Fibonacci rule. You just need it when there is like big movement. So that's where it's like here, nothing. But here maybe here wasn't any setup, so um, wasn't point to drag this, but yeah. Yeah, it just help you a lot, I think. And let's see what was more in there. So so yeah, Fibonacci rule 50%. So I use 45 to 55. It shouldn't it don't have to be exact 50. So yeah, it's kind of like I think you know what I mean by that Fibonacci rule, and with those examples, you can see what it will be avoided and why I rate this rule. So yeah, so the next rule is I think I had that rule before as well, so I have no problem to enter the trades before the news. But not like 1 minute before news or something like that. So if you see that market is already starting to go crazy, it's better to just stay out. And usually after 30 minutes, market is like messed up so much you can get like wrong signals and anything. So 30 minutes before, not before, after the news you shouldn't be trading. And if there was like last week there was NFP, I didn't trade like 1 hour after the news because I saw that the market was so messy. So it's better to stay out with those conditions. And if all those rules met and everything is correct, then you should enter a trade after candle close. I enter actually few seconds before candle close. If you see that already signal is clear, everything is clear, just open the trade 2 or 3 seconds before, because usually when candle closes, it will jump into our direction already. So you can get little head start because of that. And still using fixed TP 2.5 bips and stop loss 5 bips. I kinda have changed that a bit as well to get exactly 0.5 RR. So I use 2.6, 2.7 bip take profit and 4.8 bip stop loss. So that way I get like exactly that risk reward because of commissions and slippages and stuff. So yeah, and I use 2% risk. I really recommend you to use a lot less. Even, I don't know, start with 0.2 and just build it up. So there was last week was actually my first unprofitable week. It wasn't that bad. It was -3%, I guess. But week before that was +7. So I'm still up. And this week I'm up a lot. But this week, what I did, I just lowered my risk to 1%. And yeah, if I make this 3% back, I will stay with 2%. Let's say I think I'm already made it back. It's Friday, so it was a nice week, but I made it back already. But uh, let's say if I would lose more, like another -3%, then I would lower it even more. So yeah, lower the risk that much that you can see that you will survive in every situation. So with 2% risk, if you use prop firm, it's just 10 losses in a row and you are done. it shouldn't be like that. Not 10, it's 5 losses in a row and you're done. So it shouldn't be like that. You should manage your risk well. If you see like there is not maybe good times for you, or you don't really know the rules exactly, or you're just unsure, or emotionally touched, engaged with trading, and it's not going well because of that. So it's better to just lower the risk, and slowly build it up till you have your confident, and you build it up with your confident and skills and everything. So yeah, don't try to make a lot of money. It's usually that way you will lose your money. So yeah, just important thing is that you should know this age of this strategy, of this indicator, and you should know your rules and how they work, why they work, and so on. And like you will understand them soon, and then just build up your profit or risk, and yeah, there's nowhere to hurry. I think most of the losses comes from that you want like too good results too far, not too far, too soon, and then you don't really look out for rules, or if there was any mistakes you made, or analyze your trades and so on. And so yeah, there, like in our Discord there is a lot of I would say a lot of mistakes taken first month. So after the first month usually it gets better. So yeah, even few weeks and you're good to go. It depends how fast you will learn, how much you will spend time with this indicator, and how many videos you watch and know the strategy well, and so on. So yeah, those were new rules. I think I explained them well. I don't know what I should add here, and yeah, like two things basically only. This premium entry models, they should be easy. It's like you see in here. You should like you should you need like some pullback, and then some broken level to go in, not just this kind of breaks, like linear breaks. And about Fibonacci, just at the beginning of the move till the end of the move, just drag it down, and it's should be with buy setup below 50 or 45 or that area, or just tap it into this area, it's fine as well. And with sell setup, it should be above this area. Uh, as you can see in here, those were invalid trades and those were losses as well. So those are the most like most of the losses came from this like too soon buy or sell. So yeah, that's really it. Thank you guys. Goodbye.